Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Talks continue. The United States says technical negotiations with Iran are ongoing after 2 days of airstrikes tested the fragile ceasefire. Stocks extend gains. Asian markets rally as investors pile back into semiconductor stocks on renewed optimism over AI-driven demand. And SK Hynix in focus after pricing its $26 billion U.S. share sale. Its ADRs are set to debut on the Nasdaq later today, topping Alibaba as the biggest ever foreign listing. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. We're taking a quick look at where equity benchmarks are this morning. The S&P futures are trading sideways. They were slipping earlier in the day. So were the Nasdaq futures. Turning to a less positive session in the S&P 500. Yesterday, we saw a gain of about 0.8%. We're keeping an eye on individual names in the United States, namely Micron yesterday, which said that it was planning on increasing spending on new plants to about $250 billion to help meet unprecedented demand for memory chips. So we're seeing this demand for memory chips still very much in focus, still very much in the game. And the turning back to the AI trade, the AI boom, is seemingly what is the case in the market today, seemingly what is the case in Asian equities today that are now 1.7% higher, led by, no surprise there, the Kospi in South Korea. SK Hynix, $26.5 billion in the ADRs, debuting later today in the open in the United States. We've got Winnie in about a minute just to talk to us about what is happening in Asian equities generally. And then Brent crude edging higher 0.4%. Lower than what we saw yesterday. Now, it did reverse gains yesterday during the trading session. We're seeing a little bit of a mute in the escalations in the Middle East this morning. We're reporting that the technical negotiations between the U.S. and Iran are back in focus. We'll talk also more about that later on in the show. And then we're also keeping an eye on the 10-year yields in the United States, 4.54%. A big story from yesterday about Fed Chair Kevin Warsh announcing the leadership for 5 new task forces. Now, he did say that he wanted a regime change within the Federal Reserve. Is this signs of that happening? Perhaps some of the names that Warsh tapped into include former BOE governors, former Brazil Central Bank governors, and we'll talk more about that. But we're noticing that the yield on the 10-year notes is 1 basis point lower this morning. Now, for a check on what is happening on the moves in Asian markets this morning, we've got Winnie Su, as usual, for us in Hong Kong. Winnie, what do you have for us this morning?
Good morning, Abir. Finally, a positive day after a very volatile week in Asia. You just mentioned MSCI Asia here extending gains to about 1.7%, led by gains in the technology shares. And that is coming after those spending plans by Micron, supporting investors' optimism that the AI demand remains strong. And of course, ahead of that massive U.S. listing by SK Hynix. And that's why you are seeing Kospi here leading gains up more than 5%. But also we are seeing gains in Hong Kong shares, especially tech shares in Hong Kong, ahead of Chinese chipmaker CXMT's IPO next week. And that is also likely going to become the biggest mainland IPO. So lots of optimism around that front as well. Taiwanese markets closed today as a typhoon is approaching. But flip the board, we also want to take a look at the Japanese assets because we are seeing this triple rally across assets after the finance minister Satsuki Katayama urged pension funds to invest further into the domestic market. And that's why you are seeing Nikkei 225 here extending gains to close to 2%. Japanese yen also strengthening by 0.5% here to an intraday high 161.5. And also when it comes to bonds, we did see, in fact, yields falling about 10 basis points across the curve. Now, it really goes to show how there is more optimism that more money will return to the domestic market, especially because GPIF, in fact, now invests about half of its investment in overseas markets. Back to you, Abir.
All right. Bloomberg's Winnie Su in Hong Kong, keep an eye out on those Asian market moves. Now, returning to the geopolitical story in this region, the truce between the U.S. and Iran is in limbo after a 2-day exchange of airstrikes and the reimposition of U.S. oil sanctions. Bloomberg News has learned that technical talks are continuing as Washington remains committed to finding a solution with Tehran. For more on this story, we're bringing in Honor Ant, Bloomberg's managing editor for the Middle East and North Africa. Honor, good to have you on this morning. We've been reporting on the past 2 days' events, the airstrikes, the back and forth. But they're returning to the technical talks, according to our sourcing. What is your read on that?
Yeah, as you said, the talks are continuing, and the U.S. is committed to finding a solution. That is according to a senior U.S. administration official. And this was broadly the consensus, and you can see that from oil markets, where the prices did jump indeed earlier this week following the skirmishes. But we're seeing Brent trading well below $80 a barrel, and that's well below the peaks that we saw earlier in the conflict. And that says something about the general consensus, which is that neither the U.S. nor Iran wants to go back to a full-out war, even when President Trump signaled that the ceasefire, as far as he's concerned, is over. He did say that he would allow his negotiators to continue to engage Iran. So it was more about Trump trying to exert pressure and test the other side's limits than expressing a genuine desire to go back to war. But the problem here is, Abir, is that when the fighting starts, it's hard to foresee when and how it stops again, which is what's keeping markets and everybody else on edge.
Yeah, on edge for sure. And you did mention oil markets almost reacting instantly to the remarks President Trump made at NATO, but then steadying a little bit. But when it comes to the overall narrative, Honor, do you see more of this happening, this back and forth, this President Trump coming out saying something and then, going back on his remarks, and then we continue to see this MOU discussion kind of unraveling slightly but never really collapsing?
Well, if history is a judge, yes, it might happen again, because the differences between the two sides on key issues, especially Hormuz, which is probably the most immediate issue to be resolved, remain really large. Iran does not want ships to take the southern route near Oman. It also wants to retain a certain amount of control over which ships pass and under what circumstances. So, yes, it is likely, or it is possible, to see a recurrence of what we have seen at least twice over the last 10, 15 days during the remainder of the 60-day period since the interim agreement was signed in June.
Yeah, so more of the same patterns. All right, Honor, thank you as always for your time this morning. As Honor Ant, Bloomberg's managing editor for the Middle East and North Africa. Now let's continue the conversation on this story, and for more analysis on it, we're now joined by Rachel Ziemba, founder of Ziemba Insights. Rachel, good to have you on. Thank you for joining us this morning. You were listening to what Honor was just saying about those same patterns repeating themselves. President Trump coming out and saying something, and then we go back to a state of plateauing when it comes to the negotiations. Do you forecast that to be the case for how long? For the remainder of the year?
Yeah, thanks for having me, Abir. I think we will see some form of, or we'll see some periods of violence, some frictions, but I don't think we're going to see a long-term resolution. At best, we might see a return to the MOU, but even if there are sanctions lifting in the future relating to Iran, I think the hardliners in the United States might limit the benefits to Iran. So I think these dynamics, we're still navigating towards a new normal. And, the buffers are pretty low out there in the global economy. So I think the markets are still looking a little bit optimistic on this.
So, Rachel, you talk about the new reality, and this is a notion that's shared by a lot of people that talk about the new norm, how things are going to look like. So how do ship owners now start to make their way in the Strait of Hormuz with this new reality? But do you think that in a few years' time, the Strait of Hormuz would lose its strategic importance as a shipping route, as a major shipping route?
I do think there'll be less volume. We're already seeing commitments from the UAE and Saudi Arabia in particular. They have used the bypass they invested in already. They're trying to do that as well, especially Saudi Arabia, for other goods, not just oil. So I think, we had 20 million barrels a day of oil and oil products going through the Strait of Hormuz. End of February, right before this phase kicked off, we might see lower volumes. But there's a lot of infrastructure and logistics, whether it's Jebel Ali, whether it's different ports. I think there will still be some reliance. Ultimately, though, it's not just about Hormuz and a strategic imperative, but also about whether there are risks from Iran and other regional actors to other infrastructure. For example, the UAE port of Fujairah has emerged as a very important vehicle, but it can be reached by Iranian missiles. So at the end of the day, in a context of escalating war, which is still not off the table, that remains a risk. But in the region, as well as around the world, I see more commitment to alternate pipeline routes, even if those upfront costs are large. And I'm watching, for example, what will happen with Iraqi supplies. Will there be pipelines that go through Syria, especially now that it's finally coming off the state sponsor of terrorism list? These things won't happen overnight.
Yeah, but Rachel, just going back to the Strait of Hormuz itself. Just going back to the Strait of Hormuz, and it is really at the heart of all of this, right? Because during the MOU discussions, we're seeing the nuclear component take a little bit of a backseat. That's Trump's main goal. So in a nutshell, now, as things stand, who do you think has the upper hand in this conflict? Is it Iran or is it the United States?
It's hard to tell. Iran definitely thinks they have the upper hand. Trump is sensitive to higher energy prices. This new escalation is coming after energy prices have come off, or at least crude oil prices have come off. Oil products are still in short supply and getting worse, in part because of dynamics in the Russia-Ukraine conflict. But that's another story. And ultimately, we're seeing Iran press its hand and look for oversight and influence over the Strait in the future. And that's going to be something I think that will lead to lasting risk premia changing in the region and maybe persisting in some of these discounts that are offered in the region. And in particular, I'm watching, you asked about tanker owners. I think we'll continue to see some of these dark transfers and a subset of vessels that are maybe more willing to take the risk and use of the same or some of the same evasive techniques that Iran has been using for some time.
All right. Rachel, we're going to have to leave it there. Thank you, as always, for your time. Rachel Ziemba, founder of Ziemba Insights. The funeral for Iran's slain supreme leader, Ayatollah Ali Khamenei, has ended more than 4 months after he was assassinated in U.S.-Israeli airstrikes. Khamenei's casket traveled across Iran and neighboring Iraq over the past week and was laid to rest on Thursday in the northeastern city of Mashhad among a huge crowd of followers. And still ahead, OCBC tells us why they think logistics and transport costs around the Strait of Hormuz may pose a near-term challenge to central banks with explicit inflation mandates. More details on that ahead. This is Bloomberg. Asian stocks are climbing as investors pile back into semiconductor stocks on renewed optimism over AI-driven demand. The rally is being led by South Korea's Kospi, though the regional benchmark remains on track for a weekly loss. Joining us now to discuss those market moves is Selena Ling, Chief Economist and Head of Group Research at OCBC. Selena, thank you for coming on the show this morning. We spoke about equities and the Kospi in the intro, but I really want to start with the geopolitics just because it is the focus in the region. Now, you mentioned that the situation remains volatile, and the question that I have is the Strait of Hormuz still key for the reads that you have on those inflationary risks and other consequences that will reverberate through the global economy?
Well, thank you. Definitely. I think we know that the US-Iran ceasefire talks are hitting a little bit of a stalemate right now. We do know that the situation is quite fluid, but generally, I think we do expect that the Straits of Hormuz reopening is not going to be without speed bumps. So what that means is that oil prices are still going to gyrate around. The good news is that they are still trading within the $70 to $80 range, which suggests that markets are looking past this most recent development a little bit. But that said, as long as we don't have a more permanent peace deal, we don't have guaranteed complete access to the Straits of Hormuz, it is very likely that related transport and logistics costs will probably stay elevated in the short term. Maritime insurance, for instance, is unlikely to completely return to the pre-war levels, given that we still have this situation that is developing. I think for businesses, they would recognize that, it's very hard to see a very clear path, to lower costs in the short term, especially given that energy prices have lag effects.
Yeah. Selena, the underlying asset in this whole thing, in the Strait of Hormuz, is oil. And we saw how oil reacted to President Trump's remarks earlier this week when he was speaking at the NATO summit. But then we saw a steadying in Brent crude, at least. Do you think that going forward, oil markets will take those remarks seriously? Or do you think, that we'll start seeing more of a plateauing effect on oil? And what would it take for the market to reassess this war and go back to a state of very elevated levels?
Well, if you look at the traffic that's passing through the Straits of Hormuz, it's still very low. It's really not normalized yet. But on the supply side, the good news is, of course, we're starting to see OPEC Plus basically wanting to hike production, in the coming months. We also see that, U.S. crude inventories have actually rebounded in the latest week data. So I think all these kind of point to, no immediate urgency, or panic on the oil market front for now. I think the key really is in the coming weeks, and as we build out all the way to the U.S. midterm elections, is there going to be greater pressure for a more lasting peace deal? And I think the hopes are that, this will materialize. Of course, central bankers are concerned because inflation may not have peaked yet. And in fact, going into the third quarter, we may continue to see inflation creep a little bit higher. So the policy dilemma is really how to, marry this higher inflation prints for the coming months and the quarter versus the fact that, we do expect that eventually we should get to some sort of a deal between US and Iran, and hopefully the Straits of Hormuz will reopen without too many speed bumps along the way.
And just speaking about central banks, I want to pivot to the Fed and Kevin Warsh's the five task forces that he established. He did promise a regime change, and we're seeing by the end of the year, traders are still betting on a rate hike, 35 basis points in total. What do you think Kevin Warsh is going to be trying to do until the end of the year?
Well, I think actually the path of least resistance is to not rock the boat, which is why our house view is that, the hurdle to a rate hike is actually still pretty high. You really need the incoming data prints, whether it's on the inflation side or on the labor market side, to be signaling, significantly higher inflation for the hike to actually materialize. So rhetoric is leaning hawkish, but it may not necessarily materialize in a rate hike, even though the futures market has already priced in. As far as the regime change is concerned, I think that's imminent. The 5 task force will announce their recommendations by the end of the year. I think if you look at the picks that he has chosen to head up those task force, it's a very interesting mix of people, but generally people with quite a bit of institutional knowledge, if not industry knowledge. And the inclinations are basically leaning towards, less Fed communication, especially in terms of forward guidance, tighter balance sheet, a greater role for AI in the US economy, and also in terms of the overall framework of how to tie inflation expectations, a more rules-based monetary policy framework. So I think all these are basically, in the cooking, so to speak.
All right, so cooking is a good word for it. Selena Ling, Chief Economist and Head of Group Research at OCBC, thank you for your time this morning. Now, Taiwan has suspended stock trading and closed schools as Typhoon Bavi approaches the island. The storm is expected to dump heavy rain over a vast area and could lead to extensive flooding, even though it isn't expected to cross Taiwan's coast. Bavi is then forecast to move toward China's east coast, where heavy rainfall is expected across several provinces through the weekend. And the Federal Reserve Chairman Kevin Warsh has announced the leadership of 5 task forces to examine the central bank's approach to key aspects of policymaking. The groups will examine issues including communications, the Fed's balance sheet, jobs, and inflation frameworks. Warsh says the aim is to ensure the central bank is using the best tools and policy approaches, with recommendations due by the end of the year. But coming up, shipping traffic through the Strait of Hormuz grinds to a near halt. We'll get the latest on the oil markets next. This is Bloomberg. Meta shares jumped in New York after the tech giant unveiled the latest version of its most advanced AI model, Muse Spark 1.1. The update includes a new paid tier for developers, marking the first time Meta has charged businesses for access. CEO Mark Zuckerberg told Bloomberg the new model has, quote, state-of-the-art or very close to it, agentic reasoning, and pricing will be, quote, very aggressive and attractive. And former Fed Chair Ben Bernanke has been appointed to Anthropic's Long-Term Benefit Trust. It's a governance body designed to safeguard the startup's public interest mission, advising management on decisions around AI risks and impacts. Bernanke has 3 fellow trustees who hold no financial stake in the company, but will have the power to appoint and remove board members. Coming up, we'll get an update on oil markets. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Talks continue. The U.S. says technical negotiations with Iran are ongoing after 2 days of airstrikes tested the fragile ceasefire. Stocks extend gains. Asian markets rally as investors pile back into semiconductor stocks on renewed optimism over AI-driven demand. And SK Hynix in focus after pricing its $26 billion U.S. share sale. Its ADRs are set to debut on the Nasdaq later today, topping Alibaba as the biggest ever foreign listing. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Amr in Dubai, still keeping an eye at where equities are this morning. We're now seeing S&P futures back down 0.1% lower. The tech-heavy Nasdaq futures were also slipping earlier, so pointing to perhaps a negative session in the S&P 500 later today. We did see U.S. equities edging higher yesterday, 0.8%. Some individual names there are in focus, namely Micron, the chip-making giant in the United States, saying that it's aiming to build or to increase spending on new plants in the United States to $250 billion. So we're seeing more and more of these big names relevant to AI coming and increasing their capex. Well, we have spoken multiple times on the show about what that means for the AI trade and the boom that we've seen since the beginning of the the year. And speaking of the AI boom that we've seen since the beginning of the year, Asian equities 1.6% higher, led by the Kospi in South Korea. I spoke at the top of the show about SK Hynix and its listing set for later today in U.S. opening hours. We'll talk more about that towards the end of the show. And Brent crude is 0.5% higher. We're still below the $80 on the barrel mark. We're keeping an eye out on the developments in the region, but we seem to have a less retaliation, less muted or more muted reactions from the Middle East today. We still keep an eye out on President Trump, his remarks, what the Iranians decide to respond with, and definitely the movement in the Strait of Hormuz, those oil barrels that have come to a standstill yesterday. And we'll talk about that as well in a second. And then the yield on the 10-year notes, 4.541 basis point lower. Kevin Warsh said he wanted a regime change in the Federal Reserve. And it seems that he's doing that. He had appointed a leadership for 5 new task forces. Some of those people, or some of the people that he tapped into, include Mervyn King, who's a former BOE governor, Arminio Fraga, a former Brazil Central Bank governor, and other people with academic backgrounds and also policy-making backgrounds. So that is something to keep an eye out on. And the hawkish tilt that we've been speaking about over the past few months since Warsh was appointed in May. But for a look at what Asian equities are doing this morning, we've got Winnie Su again in Hong Kong for us. Winnie, what do you have for us now?
Yeah, morning, Abir. It's quite a nice way to wrap up our week in Asia, with the MSCI Asia here up 1.6%. In fact, having its best day in a week. Now, as you just mentioned, the gains are really being driven by technology shares, especially after Micron announced those spending plans, reassured investors that the AI demand remains solid. And hence, we see that the Kospi here up about 5%. And in fact, just as in the past 30 minutes, we did hear that the exchange triggered another sidecar. So you can see lots of excitement and volatility in the gauge as well, ahead of that listing by SK Hynix on the U.S. market. Now, when it comes to the Japanese market, we are seeing that triple rally across assets, from stocks to currencies and to bonds, after the finance minister Satsuki Katayama called on pension funds, including GPIF, to invest further domestically. Now, flip the board, we take a closer look at technology shares, because all eyes are really on SK Hynix, which is fluctuating a bit today right now, ahead of that $26.5 billion of U.S. listing. Now, that is going to make it the biggest U.S. listing by foreign company, but also the world's 3rd biggest listing. So all attention on that. For now, we are pricing about 3% premium against Thursday close in Korea, but we will be very closely watching out how that premium changes once the trading starts, because that will give investors a good idea in terms of where sentiment is for that AI trade. And also across the region, flagging that we do see Chinese chipmaker here, Hua Hong, for example, rising 7% ahead of that big IPO by CXMT, which is a Chinese chip-making, memory chip maker giant, due next week. So lots of attention on that as well. Back to you, Abir.
All right, Bloomberg's Winnie Su wrapping up the week's market moves for us. Now, turning back to oil prices have stabilized after a turbulent week as the U.S. and Iran continue diplomatic talks despite a recent flare-up in fighting. For more on the movements of oil, we're now going to move to our oil and shipping reporter, Wei-Loon Soon. Wei-Loon, good to have you on this morning. What's the view as of now of the market to this recent flare-up that we've seen catching on earlier this week?
Thanks, Abir. As you mentioned, oil prices have stabilized today, and I think that says a lot about what Washington is trying to do, trying to convey some form of confidence that the interim peace deal, the talks with Iran are still going on. But if you take a look back, we started the week with Brent closing around low 70s. Now we're nearing to $77 a barrel. And that tells you how much that sentiment has been so fragile throughout the week. We have Iran striking 3 ships one with Qatari, one with Saudi, and one with Emirati cargo. So that was a very strong signal to shipping. And then later on, you have the U.S. attacking Iran in retaliation for those Hormuz attacks. So it can tell you that sentiment is still very fragile. It can change a lot in just one moment.
And Wei Lun, the two sides have really stopped short of a return to a full-fledged war. That's what we've been reporting over the past couple of days. But when it comes to the Strait of Hormuz, that's really at the heart of this. Iran asserting dominance over the Strait of Hormuz. This is how this whole thing started. Where does the traffic, what does the traffic look like now in the waterway? What are the expectations? Are we still near a standstill there?
Right. So visible traffic, that means ships with their transponders on, those were almost non-existent since Thursday and also a little bit of today. We do see ships going through Hormuz in the dark, but these are few and far between. So if you take all in all, since Thursday, the average daily transits has plunged than when the interim peace deal was signed. And if you look at it, since the beginning of the war, there's only one single supertanker that's left stuck inside. So all of those backlog have now exited the Persian Gulf, but we do not see empty tankers going back in. So there's still a certain sense of cautiousness among ship owners, and that's crucial for Persian Gulf exporters to continue exporting. They need those empty tankers to go in.
Yeah. All right, Wei Lun. We're also keeping an eye out on Qatar pausing the push for a quick LNG ramp up. This was a story that we also reported yesterday. Wei Lun Soon, Bloomberg's oil and shipping reporter. Thank you as always. Now, for a look at some of the other stories that we're following, Morgan Stanley has cut its outlook on Saudi equities due to signs of easing Middle East tensions. The bank moved the oil-rich kingdom to equal weight from overweight and said that Saudi equities would be challenged by falling oil prices and growing downside risks to the U.S. dollar. And Deutsche Bank is expanding its presence in the Middle East with a new research hub in Doha. The center will support the bank's global research and initiatives, with staff set to relocate to Qatar over time. The move comes as international banks continue to expand in the Gulf despite heightened geopolitical tensions. And coming up, Tanzanian billionaire Mohammed Dewji explains how he plans to tap growing global demand for graphite. That is coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. METL President and CEO Mohammed Dewji has told Bloomberg he aims to invest hundreds of millions of dollars in refining graphite in Tanzania. The billionaire business tycoon spoke to our chief Africa correspondent, Jennifer Zapasatra, about his plan.
Africa in history has always mined, but the processing has moved to other countries. So we are going to initially put in a project of about $25 million where we're going to do primary processing of graphite, where we'll get about 94% purity. And then the second medium-term plan is to invest $250 million to refine that into 99.5%, create spherical graphite for cathodes. Then we can market directly. And this is the value that Africa should look for.
Graphite is largely dominated by China at this point in time, both synthetic and pure. What is the value play that you see, especially if you have a China that is dominating this market?
I think that's a very brilliant question. As a matter of fact, not only that China is dominating, all the technology of that pure graphite is only in China. And 90% of this is processed in China. But as we can see, there's a little bit of a rift in the West. The Europeans, the Americans are getting a little bit nervous around China. And I see this as a great opportunity for Africa to step up and to have a supply that is out of China, which brings a lot of comfort to the West. To that extent, I was in France and I met some very senior people, and they have this export credit finance structures where generally ECAs are meant for you to buy countries' technology and bring it to your country, and they finance that because, you know, it supports the whole industrial base. But today, Europeans are open for me to buy Chinese technology on an export finance of a European country as long as I give them offtake. So I'm stepping into a gap between China and Europe and the West.
So you already have partners then in the West that you've spoken to, investors who are buying into, would buy into?
On offtake purposes,
on offtake.
But this will be principally METL Group's total investment plan.
What is that? What's the timeline for this?
So the first timeline, the first process, I think we have already quantified reserves of the graphene. Within 18 months, the primary processing will be set up. And then I believe from there, in the next 24 months, the $250 million investment will come in.
From METL?
From METL Group, yes.
Into the mining sector. Yes. Then do you expand out to other minerals, or do you focus in on graphite for the moment?
Right now I'm concentrating on graphite because, you see, when you talk about mining, you can do copper and gold, and Tanzania has got a lot of gold. Yeah. But those are a little bit of speculative businesses because the Barrick golds of this world have got enough concessions and they are big enough to try and miss. See, I have gold concessions, but the question is, yes, there is gold. How deep is the gold? One, what is the purity of the gold? Two, what is the economics to extract that gold? So I haven't reached that stage. So first, I'm focusing on graphene and graphite.
That was Mohammed Dewji, President and CEO of the METL Group, speaking to our own Africa correspondent, Jennifer Sapasaja. And Jen joins us now from Cape Town, not Johannesburg, this morning. Jen, great interview. Good to have you on. Let's talk a little bit more about it. What is Mohammed's timeline for the rollout of these investments?
Well, I think what's key, Abir, is that this is quite a significant shift for the METL Group. For decades, they've been focused on manufacturing consumer goods, and this is the industry they have really zeroed in on over the past few decades. But he clearly, as you were just hearing there, sees an opportunity to tap into some of the demand for minerals, especially when you think about some of the diversifying that we're seeing some major countries do in terms of their partnerships. And so as far as his timeline goes, he's really targeting what he told me was 50,000 tons per annum as it pertains to graphite in particular. And he does hope that some of these partners that he has been speaking with in Europe and also in Asia, we should point out, will be the partners that he sees moving forward with some of these mining opportunities. But, you know, I know you heard there a bit about some of his discussions with the West and with the U.S. He still potentially sees down the road there could be some opportunities, especially when you think about the demand for graphite right now. It is dominated by China as far as the mining goes and also the processing. And so he also has a rollout for what that looks like in terms of being able to purify the graphite over time and how that might change then who he's ultimately selling to.
And Jen, if this is a successful feat, how would it impact the Tanzanian economy?
It's key for Mohammed Dewji when he thinks about the long-term success and really the growth of the Tanzanian economy, especially when you look at some of the numbers and what we have seen over the past few years with the economy. The government is quite ambitious as far as what they're seeing GDP and economic growth to look like. They're targeting growth of over 6% for this year and potentially it going even higher. And a lot of that is supported by investment investment into sectors like mining, like agriculture, like construction. And so Mo sees this potentially fitting into some of those plans that the government is already in the process of working on. We should also note that we've been reporting quite a bit about Aliko Dangote, which is, of course, Africa's richest person, in discussions with the government to also invest in some of those infrastructure projects. So potentially this is a boon to what we are seeing, but the Tanzanian economy still is undergoing quite a bit of a tight monetary policy situation. We're seeing stagnating foreign direct investment coming in to the government. And so there's still quite a bit of a gap that needs to be made in terms of private investors like Mo, like Aliko Dangote, and others to potentially catch up the economy to where the IMF sees it going.
All right. Jennifer Zapasadra, our chief Africa correspondent, joining us from Cape Town this morning. Now, for some other Africa stories, the World Bank says Kenya's economy is likely to grow at the slowest pace since COVID. The Washington-based lender blames the U.S.-Israeli war on Iran for higher crude and fertilizer prices. The economy is also facing higher debt service costs and weak revenue. East Africa's biggest economy is expected to expand just 4.3% this year. Nigerian equities have overtaken South Korea's to hand investors the highest dollar-based returns this year. Souring sentiment on AI stocks have pushed the Asian nation's world-beating rally into bear territory. Nigeria's gains have been led by financial services companies, and the S&P Dow Jones Indices is considering upgrading the country to frontier market status. And coming up, South Korean chipmaker SK Hynix raised $26.5 billion in its ADR offering, making it the largest ever U.S. first-time share sale by a foreign company. That story is coming up next. This is Bloomberg. SK Hynix raised $26.5 billion in its ADR offering as the chipmaker powered through volatility to deliver the largest ever U.S. first-time share sale by a foreign company. We're now joined by Bloomberg's Balazs Pens from Hong Kong. Balazs, was everyone expecting this share sale to be so big?
Well, we knew it was going to be a very, very big share sale. From the moment it was announced, at some point we expected as much as $29 billion to be raised in this deal. The Hynix stock has come down a little bit in Korea over the past couple of weeks, so the size was a little bit in question. But in the end, they pulled through. They delivered about a 3% premium over the Korean stock, and it just got in above Alibaba to make it the biggest first-time share sale by a foreign company in the U.S. ever. So that just shows the continued demand for the Hynix story, the continued belief in this company's role right in the middle, in the heart of the artificial intelligence, build out the demand for their memory chips and their dominant position on that market. There was very, very strong demand. We heard before the pricing that the issue was 7 times oversubscribed, so a lot of people interested in this stock. And obviously now the attention will be on how the ADRs will perform in the U.S. when trading starts Friday morning in New York.
And Balazs, the SK Hynix story, what does it tell us about the wider appetite for chip stocks?
I think if we look at just the share sale in particular, it suggests that the appetite continues. And just if we look at Asian markets in connection with these, this week we have seen a whole lineup of Chinese chip makers and AI companies coming to the market and raising more and more funds. There was a $4 billion deal yesterday, a $2 billion raised by a company called Minimax, an AI model maker today. So it shows that there's still a lot of enthusiasm, a lot of demand, and these companies continue to come to the market to tap into that enthusiasm and to raise funds for their own build-outs and to be able to increase production because the demand for these chips, especially the ones that Hynix makes, remains so strong around the world.
All right. Bloomberg's Balazs pens with the latest on SK Hynix, and we'll hear more from the SK Hynix chairman as the chipmaker makes its U.S. debut. Don't miss that conversation in a special earlier edition of Bloomberg Tech at 6:30 p.m. Dubai time. That's 3:30 p.m. London time and 10:30 p.m. in Hong Kong. Now, Goldman Sachs has tightened its personal trading rules, restricting employees from betting on a range of prediction market contracts. The updated policy covers wagers tied to company-specific events, regulatory approvals, global conflicts, and even the future price of Bitcoin. Employees who violate the policy could face penalties ranging from forfeiture of profits to being fired. And Kylian Mbappe had a goal and an assist as France beat Morocco 2-0 in the World Cup quarterfinals. It was Mbappe's 8th goal of this year's tournament. He later left the game to an injury scare but said he's fine despite a right ankle issue. France will now face either Spain or Belgium in the semi-finals. That is it for Horizons Middle East and Africa this morning. Stay with us for Daybreak Europe. This is Bloomberg.